And where we find the sweet spot really is someone who is also charitably inclined, because whether people realize it or not, you're charitably inclined. That's what taxes are. It's your social good back. You get to either choose how you get to do that or you don't.
What's the number one best secret that you found for helping your clients create a rock solid tax plan?
Well, I wish there was only one thing, but we can focus on one thing here. And I think the first thing is to recognize that you have a tax problem potentially. And so the first would be focus on the fact that there might be some tax opportunities and solutions, and look at your assets. So one of the things that we come in contact with all the time is precisely for your show in particular, is people with a low basis in a highly appreciated asset, whether it's real estate or some type of stock or equity. We find it's often a concentrated position in a large publicly traded stock or real estate that people have worked for a really long time. So either way, there's a low cost, low basis, high gain. And where we find the sweet spot really is someone who is also charitably inclined, because whether people realize it or not, you're charitably inclined. That's what taxes are. It's your social good back. You get to either choose how you get to do that or you don't. And so for us, that sweet spot is you find that high gain, and then you find the charitable intent, and you put those two together. And so we use essentially capital gain. We call it a capital gains avoidance strategy. And essentially, you avoid the capital gain and the sale up front, but you also fulfill some visionary ideas at the same time from a giving standpoint, and it can be a real lever. It can be a real leverage point, if you will, for people to be able to accomplish the tax saving as well as income, as well as the charitable giving piece. So it's a multi-tier ability for them to do that. Of course, you can make them work even if people aren't very charitably inclined, as you know, right? I mean, as you know, there's many different ways to do that, but that's where we've seen a magical connection and a big lever for folks.
Excellent. And so what you're referring to is maybe the Charitable Remainder Trust. Is that what you use, Barry?
So I always withhold the name until I help explain what it is. Because if you can take an asset, you can sell the asset, you can avoid the capital gain in the sale of the asset, you can diversify that asset, convert it into income stream, and then you can also create charitable gift and get a tax deduction all in the same transaction with the same asset and the same vehicle. Is that appealing? Yes, it happens to be a charitable trust. It can be a charitable remainder trust, charitable annuity trust, charitable unit trust, charitable remainder unit trust. There's lots of different variations of that, as I'm sure you're aware, Brett. But the idea I love to get people connected to is the ability to do those things. And if you can do that, then let's talk about we can call it by its technical name. A lot of people get confused by the technical names, I find.
Yeah, no, that's great. And you're absolutely right. And it's a nuance there, right? And there might be some, a little bit variation of one you might use, but very good. All right. So the biggest tax problem or biggest secret to helping have a tax plan is recognize you have a tax problem, right? And guess what? Your biggest expense in your life is taxes, right?
That's time.
With everybody, right? And so
Big
tax
time.
problems. So recognize that.
And it's getting worse, Brett. And people don't even realize it.
Yeah, Mr. Biden is in the administration is proposing some really I think punitive, 20 to 40% on the federal, 39.6 on the capital gains tax rate, right? Which is huge. I'm in California. We're just touring a winery house, and it was an $18 million sale. They have a $10 million gain, and they bought it for $8 million. They're selling it for $18 million. They're looking at a $10 million gain. So that's 33% in California. As a primary, that's $3.3 million. Well, if the 20 gets at it, that's another $2 million, right? So it's pretty incredible what's happening right now, as well as potentially taking away or limiting the 1031 exchange, right? Which is another thing that a lot of folks like to use for investment real estate trading, right? To defer the tax.